Okay, so what does the announcement about no penalties mean? It means there won't be any penalties. The return is still late. The deadline for the return remains midnight on the 31st of January. And the main implication, therefore, is if you file in February, there will be no penalty on your client, no fixed £100 penalty, but there will be an extended inquiry window. So you need to bear that in mind where you are electing that you will push some work down the road. Now, part of it depends on what agreement you've got with your clients and how you phrased your letter of engagement. So very often your letter of engagement will say, okay, in order to do your tax return, we need your stuff by this date, or we will agree a date with you each year. Your letter of engagement might then say, if you get it to us later than that, we'll do our best to try and get it in, but we won't be liable for penalties, interest, you know, whatever, however you phrased it, if it's filed late. Now, the penalty bit has receded, but we'll come to payment. Interest relates to payment, but this extended inquiry window, if you are deciding to push client returns beyond the 31st of January and they sent their stuff in by the deadline that you set them, I think you need to go back to your clients. If you've got a load of staff off sick and you can't get the returns in, even though your client sent it in by the deadline, then you know, I honestly think, because you are exposing them to an extra 3 months effectively inquiry window. So what happens is, if you file in February, your inquiry window will not run until the 31st of January 2023. It will run until the 30th of April 2023, because what you look at is 3 months from the date it was end of quarter, sorry, the quarter in which the return is filed, February, March, April, and then you go 12 months down from there. So you're extending the inquiry window. Now, you know, if clients have not met the deadline, you may feel that you're covered. If they've not met your deadline, you may feel you're covered, but just you need to have a little bit of a think about that. In my practice, I've got one job in that isn't done. So when I tweeted my less than 10 to go, I had done everything that had come in. And I've got one, and it is I'm looking at it, it's an Iceland bag. It's a very grubby Iceland bag. And although I claim to be fully digital, when I take clients on, I have to get them onto digital. So I still have, it's just down here, I still have things like this coming in. I'm going to crack on with that today. I've got a few client things to do, so I'm going to crack on with that today. But think about that inquiry window. So that's really important. Your amendment window remains 12 months after it was filed, so you will be able to identify what your amendment window is from your record of when the return is filed. Everything else to do with 31st of January deadlines is unaffected. And I'm going to take you through that. I sat down and I did a really, really big delve through what has got a 1 year and 10 months or a anniversary of the due filing date deadline. And I've got all of those listed out for you so you can identify where clients actually need to file. Okay, Ashok, you've asked a question about printing the slides. I've no doubt Zoe or Naomi will come in on that one. Okay, so let's go on. And so I've clicked on something and there. Right. Okay, so let's talk about payment. So tax is still due on the 31st of January. And if they don't pay that by the 31st of January because you haven't done their return and therefore you haven't worked the tax out, they will bear an interest charge. So you'll need to be clear about that. And that is both the final payment for 21 and the first payment on account for 22 will carry interest starting on the 1st of February. So if your clients want to avoid the interest charge, they will need to pay their tax by the normal due date. And that's another bit of potential dialogue with clients. So you need to think about how you manage that, whether you get to, whether you send out an all clients bulletin now, whether you get to a point where you go, right, all these are going to be late, we'll go back to them. Whether if clients are still sending stuff in, you respond with that to say, we can't guarantee we'll get your return done in time for you to pay. You may well be liable to interest. Okay, but you've got that cover in your engagement letter anyway, probably. It's a pretty standard term. The rate of interest went up on the 4th of January. So the rate of interest is 2.75%. It was previously 2.5%. Went up by 0.25% on the 4th of January. So that's interest, and you will probably already know which clients will be jumping up and down about interest charges.